Welcome to Microcap Explosions. This is Mariusz Konieczny, and I am chatting with Kuppy. Hey, Kuppy, how are you?
Hey, how's it going? It's been a while.
Yeah, wild week, wild 2 weeks. I have seen you being very vocal on Twitter. So let's go on. What's on your mind? What's happening with the markets? What are you doing?
So, for quite a while, I've been calling for a crash of the Ponzi sector. It looked like it was actually rolling over in 2019. Ponzi sector to me, these are companies that will never reach profitability. They basically take $1 of investor money and they spend it to get 80 or 90 cents back. And it's often consumer businesses, but they're just buying unprofitable revenue. They often have negative operating leverage. And some of these companies like Peloton have hit massive scale with massive revenue, and they still lose money doing this. And it probably should have all rolled over and just died a happy death in 2019. But then COVID came, and the Federal Reserve printed trillions and trillions of dollars, and the U.S. government printed, or handed out trillions of dollars in stimulus checks, and the whole thing just went into a hyperdrive because all these retail traders showed up and they funded all this crazy nonsense, and these companies had an even bigger bubble, and eventually, it ran out of cash to burn. I guess what you'd say. They stopped showing growth. The Federal Reserve has been tapering. I mean, they're not even QTing yet. They're just tapering. And the amount of money coming into the system is slowing down. And the retail guys stopped making money trading this crap. The retail guys, they always buy at the top. And the insiders sold all the stock to them. And, they overwhelmed them. Supply and demand, the stock started dropping. And then the retail guys started getting margin calls. And here we are, exactly what I thought would happen. I was just a bit early. But I'm always a bit early, but I get to watch the fireworks because I know exactly what's going to happen at this point. Because when you have a Ponzi scheme, Ponzi schemes are very easy sort of things to analyze on the way up. It just takes, it's a very simple mathematical formula. More capital comes in, the Ponzi scheme, grows, and when capital starts coming out, it collapses, and the collapse is usually very fast because most of the people who own these things kind of know they're fake, and they just own them because it's going up. And so when it stops going up, everyone hits the bid at the same time. And that's what we're seeing right now this month.
Yeah. So you said you were early. Did you try to position yourself early, or did you just, because I know you made some trades recently?
I tried to short a few of these things. There were a few moments where it looked like it was about to break, especially in 2019. And I just got ran over. I didn't play it very big. And ever since the bottom in 2020, I just had this view that I call it Project Zimbabwe, where they just print a lot of money and this huge fiscal and monetary. I know enough to know you don't short trade that. And thankfully I wasn't short. But no, I haven't really put any trades on at all on the short side. I've just kind of watched in bewilderment.
Yeah, I saw you were trading Ark Innovation Fund. So are you still in it? I mean, that was like a perfect call. It's like the the moment you said it, it was like went up. But are you still in it, or you exited?
I have a tiny little bit left. So I cut my teeth in investing really in the bear market of 2000 to 2002. And at first I was short, but then I realized you can make a lot more money actually on the long side. It kind of panic bottoms. They're very I don't explain it. It's kind of very obvious when the selling is kind of ending. And it's sentiment, it's volume, it's all these things. It follows pattern, and so you get these really sharp snapback rallies because the shorts all press too hard and they cover, and the margin calls end for a bit. There's a ton of money to make there, and secondly, at the bottom, implied volatility spikes, and you can write some puts, and usually get paid pretty damn well on the puts. And so you take a couple shots at these things, and it felt pretty obvious Monday morning that we were near a bottom. And what's the most hated asset right now in the galaxy? What's the asset that everyone on Twitter is making fun of, including myself? It's Ark. And you just know that hated a bunch of guys are leaning in on the short side. And when it stops going down, they're going to cover. And that's exactly what happened. I bought some at 66. I pretty much got the bottom. I sold mine at 70. It got all the way to about 74. I wrote a lot of puts. I had some little bit of common, but I wrote a lot of puts. I booked those all before the FOMC meeting. I had a plan. I stuck to my plan. And the FOMC meeting, they said exactly what I thought they'd say. They basically said they're raising rates. Fuck your calls. And the whole thing waterfell. And so I got a little bit of Ark left. I wrote some out of the money puts. And I got paid really well on them, and either I'm gonna roll them down because I don't want to own this thing, or I'm gonna capture my premium. I'm not really sure. I've a tiny little position left. I have a pretty meaty position. I mean, the thing about writing puts on a diversified basket of stuff, even if it's all frauds, is that realized volatility tends to be less than implied, especially when implied spikes into the 70s and 80s. And so I felt like I was getting paid well for the risk I took. I mean, look, Ark's down 40% in 90 days. That's a crazy crash for an entity with no financial leverage, even if it mostly just owns frauds. So I had a nice trade there. That's all I got to say.
Yeah, I was curious. Where because Ark is down a lot from the peak. What do you think is going to happen with that? Like, let's say 2 to 3 years. How do you think it's going to play out with Ark?
Oh, it's going to be trading at a couple dollars a share, and there's going to be a few hundred million AUM left in it, and it's just going to sort of fade into irrelevance. I've seen this happen. We saw this happen with Munder, and we saw this happen with I can't even remember all the funds. First Hand Fund. There's so many. Wagner. And all these things, kind of got all the money redeemed, kind of stuck around for a couple of years, hoping that the Ponzi bubble or the tech bubble would reinflate. And eventually they got bored of it. They kind of went on their happy ways. I mean, look, she's made a ton of money in fees. She doesn't really need a job. And it's kind of, a personal pride thing. Right now, she thinks she still has a shot at making new highs. When you're sitting there at $6 and then, the old highs are 150, you kind of give up. It's just not worth it. And so, no, I think that's what's going to happen. But it's going to be a crazy ride down. And I think a lot of people expect this to totally waterfall, and there will be some waterfalls. But I think the waterfall's already happened. 140 down to 60 is a big drop. From here, it's going to be down 5, up 2 sort of thing. And the implied volatility will be overpriced, and there'll be a lot of opportunities there.
You see, that's the thing. When you've been doing this, since the early 2000, you've seen these, trends. You've seen these money managers come and go. Here's the new hottest manager, and she's just, at least that's how I'm reading it. She's just another one that's going to come and go.
Yeah, I mean, look, sometimes you have managers that are really intelligent and capable and competent, and you can hear what their investment thesis is. And you're like, that's impressive. This person's done a lot of work. And then you have Kathy telling you about how many robo-taxis they're going to build. You kind of just shake your head and, sorry, lady, these things aren't going to fly next year. It's just not this how science works. And I mean, you look at her work and, there's this there's errors in her Excel spreadsheet. Like, she coded it wrong. The whole thing is just nonsense. And people do sloppy work in this business. Eventually, someone else who works harder takes their money. That's the nature of finance. You can get lucky for a bit, but there's a lot of smart people. Eventually, someone's going to take your money.
Yeah, talk to me a little bit about Bitcoin. You again, this is another one of those things where you played it so well, yet at the same time, you're not a believer. Like, you think it's a Ponzi scheme, and yet you still wanted to get in on the action.
Well, there's nothing wrong with buying into a Ponzi scheme as long as you know that it's a Ponzi scheme. I think the danger is when you believe something is real because you've been making money and you've listened to all your friends who think it's real. And so, I view that Bitcoin's something of a Ponzi scheme. I also see why there, could be real value there. And I have friends that I really respect that have a lot of their net worth in Bitcoin. And they truly think that it will be the currency that we use in the future. And, I don't think that's the case, but I don't want to say definitely not, because there's millions and millions of people who actually believe that. And that's a decent, number of people that want to transact this thing amongst each other. And the network effects are very powerful in, something like this. But in the end, I'm not here to pass judgment on if it's, the future of currency or not. All I know is how to read sentiment. And I knew the day that the Federal Reserve printed trillions of dollars, that Bitcoin would go crazy. And I bought a lot of Bitcoin, and it went crazy like I expected it to. And, when you think of finance, I mean, everything in finance gets solved in the second derivative, It's the rate of change of the rate of change. And And with Bitcoin, it gets solved like on like the fifth derivative, the rate of change, the rate of change, the rate of change, whatever. It's very, very attuned to what's happening with monetary policy and money printing. And this summer, Bitcoin started to smell out. In the summer of 21, it started to smell out the fact that the Federal Reserve was going to be forced to taper. I mean, inflation was accelerating. And, it sort of started rolling over. And then this fall, when oil started screaming, I mean, Bitcoin, really started falling apart. And it could just feel that the Federal Reserve was going to be forced to act. And, I played it. I got in at 9,200. I rode it to 58 thou. I sold a little too soon, but with something like this, you always want to sell too soon. It was a great trade. I mean, I've seen this story play out many times in the past, and I don't know. I played it exactly how I wanted to play it.
Yeah. So you mentioned a little bit oil. So let's talk oil because we both have the recent history with oil and oil tankers. So let's talk about this. Are you kind of like working, preparing for the tankers or the oil play? Let's talk about these things.
For tankers, no. In the end, I mean, you look at dirty tankers. There's just supply coming. It's supply and demand. There's a lot of new vessels on order. There's been some scrapping this year, the most scrapping in a couple of years, but it's just not going to balance. And I'm just not very excited about it, even with various IMO regulations and whatnot. You need something of a catalyst, and you need new ordering to slow down a bit. I think clean tankers might do it slightly better. The equilibrium is a little better, especially in the smaller clean tankers. But I'm just not that excited about it right here. There'll be times in the future where it's going to be great. I have nothing. If you want to own something that floats, I think offshore drill equipment is just going to be outstanding. I think companies like Valaris, the $40 stock. I mean, I think it could be a couple $100 in 5 years. It'd have to get to a couple $100 just to be worth a replacement cost. And if you see this, how it's gone a couple times in the past, these things usually trade at the top of the cycle for a few times replacement cost, at the bottom cycle, a fraction of the replacement cost. And Valaris has more cash than debt, and they're cash flow neutral, slightly profitable. Their backlog is building. Right now, charter rates are absolutely terrible, but utilization is picking up, and utilization picks up right before charter rates pick up. I mean, that's the thing I'd be focusing on. Look, they're not producing any more drill rigs, that's for sure. I mean, there's no one out there ordering an 8th generation piece of equipment for $1 billion. It's just, you can't finance it. I don't think you can find a shipyard that knows how to build it.
Yeah, no, it's a good point. So besides this, any things that you'd like to share, like any other investment ideas that you're playing?
No, I mean, I really love uranium here. I think it's going to be really an outstanding trade. It reminds me a lot of a Bitcoin trade. We had this entity called Grayscale Bitcoin Trust, and just kept buying all the free float of Bitcoin. Eventually, it hit a tipping point where they ran out of sellers at 10,000 and started going up. As soon as it started going up, everyone chased it, and the Grayscale Bitcoin Trust really started buying. People look back at this now and they're like, oh yeah, that was obvious. But I remember at the time how frustrating it was. I bought it at 9,200. It popped, pretty rapidly to about 12,000. Then it shook out and dropped below 10,000, and a bunch of my friends sold, and they missed the whole move. And then I kind of just sat there between 10 and 12, and between 10 and 15, and it took about 6 months to really get going. And so here we are with uranium. It's been a couple of months, and people are kind of getting frustrated. And I think it's the same situation. One day, they're just going to run out of physical uranium to acquire, and it's going to gap up. And all of a sudden, all the utilities will panic, and the price will go screaming. And then at that point, Sprott goes back to buying a few million pounds a week. I mean, it's already been buying, maybe not this week, but it's been most weeks, it's been buying a few million pounds. And I just think this is going to be one of the great trades of 22 into 23.
Yeah, I mean it's hard to time exactly when they start. A lot of people are talking about uranium. It's obvious. The thesis is obvious, but what's hard to do is wait and for this to turn. That's the frustrating part.
Yeah, but when it turns, it's going to be explosive. And if it takes 6 months or 9 months or tomorrow, like, I don't know. I just know once it gets going, I'm not going to be able to get in. And I just want to be positioned now because you never know. I mean, 2 weeks ago, there was civil unrest, almost a revolution in Kazakhstan. That could have gone a little bit different, and uranium would be at $200 right now. You just don't really know. You hate to miss something like that.
Yeah,
So
yeah,
I have a full position, and I'm going to keep what I have.
yeah. Okay, perfect. Let me ask you one last question. Um, Playboy, Playboy Group. Are you following it? Can you tell me what's going on? I see that, it's been trading down a bit.
I have not followed it very closely. I think it's going to be probably a disaster, quite honestly. They took on a bunch of debt. They bought a bunch of second and third tier DTC assets. They bought the dildo shop. They bought all sorts of just like questionable assets. In the end, Playboy is this world famous brand. It should have been a licensing and royalty business. They should have branched out into some other verticals using the Playboy brand. Instead, they wanted to have this be a much bigger company than Playboy probably was meant to be. I mean, you see this a lot where private equity, or especially in the public markets, because your cost of capital is low, where maybe Playboy was only meant to be 50 million a year of cash flow. It was just what the business was meant to be. It was at like 25 or 30, and it would have taken some work. They could have gotten it to 50, and instead they said, let's get this thing to much bigger number. And in the process, they took what's a phenomenal business, this licensing business, they mixed it with all this other nonsense. And now you have a bunch of debt and operating issues. And who wants to own DTC lingerie? Like, it's just a competitive, crappy place to be. So no, I think it's going to be no good, and I have no interest in it, and I haven't really been following it. Ever since the CEO bought a jet, I just said forget it.
Yeah. So it seems to me like more and more people are kind of realizing what you're saying, and that's why the stock has been sliding probably.
Yeah, maybe. The consumer's a little tapped out or slowing down now that they stopped getting stimmies. So that's also, part of it. It's mostly consumer product. But no, I sold my position when they missed earnings and had a bunch of moving pieces and had bought a jet. I said, this isn't what I'm looking to do. I thought I was investing in a company that was going to do something really innovative with that brand, and I was pretty disappointed with the direction it went.
Yeah. Okay. Well, perfect. All right. Thank you, Kuppy. Is there anything else you'd like to leave my listeners with before we wrap it up?
I guess the last thing I'd leave everyone with is that we've seen a lot of volatility the last couple of weeks. I think it's going to get more volatile when margin calls hit. Crazy things happen. And I just warn everyone, if you're on margin, make sure you know where your levels are. Make sure that you're not too levered, because things can get really crazy. And you just want to be the guy who's buying when someone else is in trouble. You don't want to be the one who gets in trouble.
Yeah. All right. Well said. Thank you for your time.
Absolutely, anytime.